Good morning, guys. All right, so SPFM. Actually, I gotta restart this. Until right off the back, I don't see the play I was looking for on SBFM. I don't see anything else like overextended. All the other things in the like top gainers right now, they seem familiar. But I still don't see anything right now. We'll just have to wait to see how things develop. But this big dump on SBFM, it's so sad. It had warrants on March 14th, and so we've talked about what warrants do to a stock and how when it drops, it actually makes it drop like a good 30% more. If you look on the daily, like even though this is a green day, or not green day, even though this is a red day, with the amount of extension that was like created that day, we could have treated it as a green day, and yeah, we could have had our first red day, but it went down in the pre-market. Man, really sad. 212, 600% daily. Yeah, but they have a 424B, and it talks about their warrants. Other than that, there was a lot of stuff that went on yesterday. Remember I told you how there were two people from the Fed speaking, like one from St. Louis and one from New York. Bullard, which is supposed to be the most known hawkish Fed person, he actually wasn't as hawkish as he was before. And then that's why people rallied at like 1 o'clock and 2 o'clock. That mixed with like a few other, things that brought in like a little bit of optimism. Main thing is the bears are still in control, like overall. Momentum's lost, Fed's still tightening. Numbers also came out for credit scores yesterday. People were estimating like a 4% increase, ended up being like a 20% increase, and so it's not looking good. And that's just for February's numbers that the Fed released Thursday. The estimate for March is going to be even worse. It's bad. But something else I was saying. Yeah, next Tuesday we're going to see another gap down, like really big gap down. Okay, I just wanted to see if this was just warrants or if they had like an offering or something in it too. Yeah, see, it says public offering price, because a 424B, they usually have like up to 3 different things mixed into it. And They always have a different kind of format. Yeah. One to 200 reverse split. Okay. That's fine. Yeah. All right. Hey. Wait. HEI. Doesn't that mean black in Chinese? There's no way you press that E by mistake. Like, it's not even close to the I and H. So you're just screaming black. Okay. That's a different story. Hey. What do you think of SST? Question mark. It already went up, but it went up to I think this is the one that went to 30 and then went back down to 20. Oh, it went back up to 30 again. I'll just pull that up over here first. Do I need this? No, I don't. CT. That's not SST. Hey, it's hey in my language. Oh, okay. I get it. Hey. Well. Okay, so 3 days ago, this went up to 37. And now found some support like in the 20s and low teen or upper teens area. Now came all the way back. Now, if we treat this like a bounce short, we don't expect it to go any further than like 37. If anything, 32 would be the point where you would try a bounce short. Like, even though we don't actually see like a consolidation on it, but just the overall, how do I say this? Like demand and how much can you actually fight? Those are the kind of numbers you should be like looking for. It's like up to this 37, you can treat that as like very light, and people are going to get past that, or they'll go for like a double top. But 32, that's the point where, how do I say it? Like momentum is like most important. And so if I did anything on this, I'd go in there like pretty light, just looking for like a small going to 24 kind of action for the first day. If it goes up like past that point, again, I'll go in like small, but I'll aim for a double top. So like it gets up to the top, I'll average up whatever else I have left, and then I risk like $1, like past the top. I can make this cleaner. Pretty much, I'm either aiming for a double top or I'm aiming for like 32, which is activating like this really wide range, because there's no actual like consolidation. Like you could use like this area, which it just happens to work out too. How do I talk about this? Like there's like I don't even have to look at the numbers to like tell you that though. It's hard to explain it. Oh yeah, it also has a huge market cap. Yeah, that makes it even better, like that it goes down to 32. Yeah, I still stick behind that 32, 33 area, and then having a fixed risk. I want to say $2, but yeah. But I can also see this like just trying to do a fake out thing. If anything, you can risk like $1, just be, around 32, and then if it breaks your risk, expect it to push up to the top and then rush another like dollar. And you know, if it breaks the top, give the top at least like 50 cents. Yeah, it's already been 10 minutes. All right, but what am I doing? Doing something. Oh, it went up to 32 already. Yeah. Not gonna think about it. But bro, you know I'm not gonna what do you call it? One second. Who's texting me? Chill. Dream saying. Morning, bless you. Chinese character. Wait a second, that's hey. Yeah. Yeah, that's hey. Because I always try to treat it like an octopus. Black. Okay. What am I doing? Yeah, so I don't see anything today. And yeah, before anybody asks, yes, I still think the SPY is going down. It actually went up in 51 in the aftermarket or futures and stuff. Tisk. Okay, so there's other news that I had. What's her name? Pelosi? It's better just to say her position. Okay, so we had I don't want to say it wrong, but pretty much not ambassador either. Okay. So Pelosi, she said, I'm going to go to China and I'm going to try to like work out a deal. China responded with, hey, if she comes over here, we're going to use force to like remove her. And then she happened to get COVID like within that small time window that she said she was going over there. And so hopefully she recovers. Wink, wink. Other than that, like there's all kind of like small news going around, like stuff with like EV cars and you remember I was saying like Russia is trying to, you know, pay for gold using rubles. They're only trading with people that are like friendly to their country, meaning like they're on their side. We did a vote the other day to pretty much remove all trade relations and remove Russia from the UN Council. India abstained, which is, you know, like a really big deal because that means they're not on US side or like Russia side, west or east. That means like, hey, we choose ourselves, like the essence of neutrality and stuff like that. Other than that, China chose Russia. A lot of oil and coal and I want to say energy, but like some other stuff. They've been going back and forth between like China and Russia. We put a ban, or we passed a bill to ban all trade of oil and energy with Russia, and that passed through Congress already. And then we put on another bill, or someone, it wasn't passed. It was like someone put up a bill, and they're just like, "Hey, how about we just stop all general trades with Russia?" Like, there's so many things just going like left and right. Yep. It was, other than the credit scores, there was some other numbers that came out that was really scary. Oh yeah, back to like what the Fed said. So the most bullish or hawkish, not bullish, the most bearish / hawkish Fed member is Bullard. And he came out the other day and said, I'm expecting like 5% by the end of the year kind of increases. And so he's scaring all the bulls. This time he came out yesterday, he only said 3.5%. And so that's a whole 1.5%, like in a very small amount of time. And so people saw that as a reason to not be as afraid, and they bought the dip. Other than that, I think it was the New York Fed said one of the lead council members and lead legal group members, like the head, he stepped down. And so I don't really know what effect that had, but that happened. Most of the stuff is, just don't fight the Fed kind of things. Oh, there was also big news that President Powell admitted that they committed the biggest crime in history of, the whole transfer of wealth from the poor to the rich type stuff. And to fix it, they're going to bring out the sledgehammer. Now, the sledgehammer is pretty much them selling a lot of bonds. And yeah, like if you're interested into it, just look up like the sledgehammer and Fed, and then they'll tell you the details about it. But there's so many things. MDVL. No, I didn't see it. Oh, what's this one? What's EDU? Oh, New York Stock Exchange. And not enough volume on that anyway. Oh, what about MDVL? $2, 60%, 42 volume. Okay, I like the volume, but still $2 stock, and only 60%. At least that's my first impression of it. Okay, so you're below $1. Company did their magic, whatever catalyst it is, brought it up to 2. You hit a ceiling at 240. I wonder what they did. What kind of magic did they use? MDVL. Oh, I'm tripping. MDVL. Healthcare. Yep, healthcare was really powerful yesterday. This might be the turnaround today. So 45.10. For a $2 stock, that's pretty large. Yeah. So market cap 45. Yeah, going from 80 cents up to 50. That one's decent. It's not as big as the float in comparison. It's also really crowded, being at 45 million volume. And it's only 20 minutes in. Yeah, I can see some like buyer insufficiency happening around like 240. Yeah. Good. No, it's like anywhere between 240 and 270. Stuff past that, it can get. First, let's see the catalyst. That'll help. And now it's just closing a private placement. Okay. That's his pricing. Okay, the reported earnings on the 24th. That's been positive. People sold it off. Have some support. They got their private placement. So they just closed it 4 days ago. Yeah, but nothing moved that day. Yeah, so I can kind of see it there being a resistance in the 240 to like 270 area. Just around 250 is what I'm trying to say. But there's so many things against it. Like it's not enough range on the daily, but on the what do you call that? Intraday, there's not enough range. On the daily, there's enough range. The volume is there to where buyer insufficiency can come in, but the price dollar is low. The numbers look okay, and the healthcare is pretty volatile sector. It's conflicting factors, which automatically makes it just a no touch for me, or at least not worth my trade. I can't even say that because I definitely trade something like this, but didn't meet a lot of the criteria I want for like ideal. But this whole like closing their private, like I can't understand why these just went up like in the past 3 days. Maybe it's in the details. Like what was the private placement for? Okay. I like these words. Anything that gives people a positive outlook on the future. But the thing is, like, it didn't affect it that day that this was released. It waited like 2 whole days until it like picked up. Almost 3. And I know news travels slow, but like all of it came in on the 3rd day. Well, yesterday was pretty. Yeah. Healthcare's got a lot of attention yesterday. Speaking of that, yeah. Where are you? On the weekly, it's a top one. It lines up, but it still doesn't line up enough for me to just feel like this is the one, guys. Like, I give it 3.5. Yeah, 3.5 stars. Yeah, it's one of those things where I slightly have FOMO just because it's a $2.50 stock. So I know every $2 I can get that 10% easy. But my thing is holding it the appropriate amount of time. Okay, I'm done. Let's look at something else. I'm on this too much. I'm gonna also take that off. Something else I was doing. Okay, so this went down to $6 within 45 minutes. That's sad. Good old war. Will you trade tomorrow on Sunday? No. Or I said Sunday, Saturday? No. I have 2 day trades and I get that third one back Tuesday. I just want this to drop. Like, man. The main thing is, like, I know it's gonna drop. I just want it to drop fast enough to where, not to break even, but to like come up positive. Because if this can break like certain amount of supports before, let's see, the 443, 436. I forgot what the other one was. 20s, like 22. Yeah, but every piece of like major news, I feel like it's gonna do something to help back the drop through the support. And then once that support's cracked, it becomes like a lower quality support, and then it's easier to just dip by under it like as much times. But the, what do you call it, not even the good news, the slightly bad news that can be interpreted as good news, it just keeps coming out at the perfect time, like super sus. Like, how do you call this? Or it's over. Yeah, I'm gonna stop rambling. Also, let me take this ticker off. It's giving me FOMO. There we go. That's better. I can barely see past these lights anyway. And this is up 8,000%, which I don't understand. Oh, OTC. Now I understand. All right. No, something I was doing. Oh yeah, I gotta read these. Yeah, it's nuts. Dontez, is it worth to put 50% of my capital on SPY short? So the way I see it is, if you do it with just shorting, like no options, just short, and hold it for, up to like the last week of earnings, or just like right after the hike in like May 2nd, you can get somewhere between, what was it, like 3% or something like that. And so you have to wait that whole month just to get that, just shorting it normally, because this could drop in a good scenario all the way down to like 390, and so that's $50 on a $400 stock. And so, like, it's almost 10%. That's pretty good. But over a whole month, you can go to penny stocks and you can get that in like 2 weeks. Or if you're really aggressive, you can get in like less than a week, probably in a few days, probably even one trade if you're super aggressive, or you just know how to leverage really, really well. If you go into options, instead of doing 50%, I'd say take it out and do like 25%. And if you know how to use the time intervals right, you can do it by buying. Like, I'm really against like shorting this stuff now, just from all the stupidity here. Like, just go to those known support levels and just get a very short term call. And I'm not talking about like a day, but I'm talking about like a week, and then keep a really tight risk. It really depends on your size. Like, if you're trying to do 50% at a time, I'd say, yeah, get like a week, get 2 weeks, and then hold it for max 3 days. Because the main thing is you want to make sure you don't lose to time decay, plus commissions, and still have that potential to it pretty much feels like gambling, because the pricing can get you too. Like in these moves where like it went to 444 and then like spiked all the way up, the upward spike is more predictable than the downward spike, just because everyone is doing the same thing. But when it comes to like the downward spike, like I can, how do I say it? It's the timing that's messing everyone up. That's why they call it the big casino. And if I had to do this over again, I'd go long. But that's just mostly because I know what the opposite wants to see. Yeah. Well, pretty much if you don't like have a general idea what's going on in the first place, don't put the 50% in. So it wouldn't be worth a short in the short term. Like with shorting the SPY, all I can say is if I had a leap or like, you know, at least a year kind of contract and above, that's where I would wait for a bounce on the macro look of the chart. So of course it's like okay to say in hindsight, okay, wait for this to bounce. But when I was like first looking at this, I was expecting the bounce only to go to max like 30s. And so I went in at like 20 just because I couldn't control myself. And then I didn't go in full. I just went in partial and then put the rest here and then got an average at like 24. Then now time decay probably has it down to like 420, 419 area. And so that's pretty much my break even point when we get to like May. If you do 50%, this is a good time in terms of like just overall macro. But I'd get a contract something out past September, like minimum. If anything, like almost out to December. But at that point, why would you even do it? Because the time variable will give you so much extrinsic value that like you won't be able to leverage a small premium for something larger because everyone's probably doing that. Like most people are doing puts right now. And like, you know how that goes. If the 90% are doing it, you don't want to like join them. Like the money's where the short moves are. And then if you wait the entire year with half your capital like locked up, not only are you going to like be stressed out just watching this thing, and like, is that really worth any gains that you make from this? Which, how to say this, like max at the end of the year, you come up like what? Like 50%, 30%, which is good on 50% of your money. But it's going to cause other problems that are going to cost money and time. And like, I don't know. Like, main thing is I just say, don't do it. Or like, I can't even say confidently, don't do it. It's like, it really feels like a casino. Like not a gamble, but like an educated gamble. So it really depends. Yeah. Just know though. Like if you don't know anything about it, just don't do it. Will you trade tomorrow? Yeah, no, I won't trade tomorrow. I'm not used to these long hold timelines for the options play. Okay. What's an easy one? So the thing is, you want to get something that's volatile. How do I say that? Vega. Okay, so the VIX, or like the volatility indicator, that can add to your premium if you're on a call. And the thing is, you want to buy at a lower premium and sell at a higher premium all the time. And your job is to like leverage the lowest one while still being correct on the, you know, the long time frame. And then if you can calculate those big moves and then sell like right on that big move, that's the only like guaranteed like place you can just leverage everything. Let me pull up a chart. So make this red. Oh. Oh. Yeah, really short. Hold on. There you are. So if you're out of the money too much, if you're out of the money like a lot, you can definitely get a lower premium. What date do I want though? Yeah, we'll just do a week for now. So right now the SPY is at 446. If you go to the 446, you see everything's like $3 for the calls. If you go, out of the money, since you're going call, out of the money is going to be going down, and the money is going to be going up. I always have to make sure I don't say these backwards. Yeah, I'm not in the right mindset to like try to talk about that. Never mind. Just gonna stop it because I couldn't even think. I just drew a blank. All right. Let's see what else is happening. You can actually lose past that. Yeah, see, this is where I would start to go in, but still conflicting. What would the borrows be? Oh, that's pretty cheap too. something else I'm forgetting. Something to do with 30s. Oh, the STT. SST. Much stuff. I'm not used to these hold times for the long. Yeah, the time variable definitely makes it harder. Have you considered doing all the fancy option stuff like Iron Maidens, double banana splits, or whatever all those strategies are? Yeah, I have. Each of them have their pros and cons. There's all kinds of people out there talking about those videos. I rather just stick to, like, there's different levels of options that you can unlock for your broker. In TZ, they give you like 5 levels, only unlocked up to level 2, which pretty much means I can only buy and sell calls and puts. I can't short the calls and short the puts. That's where you're, like, I know, not dyslexia or ADD, but like I know I'll get something either backwards, or I'll try one of those boxing strategies or double boxing strategies and things like that. And at the end of the day, like, the rewards are going to be safer and they're going to be small, but I think I won't learn as much from doing that. I'd rather just, how do I say it, practice my, like, reading the overall, like, fundamentals and macro, look at the technicals, and then just take a more risky kind of play with a smaller amount of money, and then try to leverage that, and then practice the leveraging skill over, that specific strategy. Like, even though risk should be your first thought in terms of like investing, I just feel like I can do a different type of risk management that can make that better. I'd rather just practice the making the money skill, and then my risk management come from just the amount of money I put in there in the first place. Because at the end of the day, like, the stocks I'll choose, at worst case scenario, they'll just go to the bottom of my portfolio, and then, like, I just wait for them to, like, come back, and then the amount of money that I would lock up wouldn't be anything worth, like, crying over if it, like, went down like 50%. Yeah, something like that. And if it's a short-term thing, it's one of those things, once you lose, you're, like, in terms of the pattern that you're looking for, you're going to know it immediately and just take the loss decisively. But getting into those, large caps, large and middle caps, I definitely color, I do like a diverse portfolio. Like, pretty much like a stock picker, like something like that. But I'd rather stick to the penny stocks in the beginning, just to see what can I do with it. But at the same time, options just feels like a gamble. Like, no matter, like, what the strategy, if I start doing those other strategies, I feel like I won't even start reading the stock. I'll just start trusting the strategy too much. Like, it's more like a personal, like, thing at that point. Yeah, if I do get to that point, I'd start using those strategies on yeah, I already said enough on it. You said double banana split. I just realized that. Whatever those strategies are. um okay, so this touched 34 and pulled to 28. Oh, it pulled to 27. Alright, so next time it comes up, it should stay into 31 until, oh, it's already 10:20. Yeah, next big bounce didn't probably happen to like 12:30. I tell if the volume's slow, if this is the right pace. This one needs to go sideways another 10 minutes and then crack below. Was it 230? We'll definitely do another test. Then crack. It'll be fine. Okay. Dontez, what is the winning percentage of gap up short? 75%. Yeah, 75, 70, around there. It's a 1-to-1 risk reward. Yeah. 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 Get over there. I'm over here double checking. Scroll. Yeah, 75%. Oh, it's 1-to-2. Okay. %. Risking 5 to 7%. 10% on this would be 25 cents. Yeah, I'm thinking really stupid stuff right now. And I need to clear my mind. Energy. Energy. Oh, what is it? Not consumer cyclical. Basic materials of empiring. Something to do with like electric cars.
all the material for electric cars, they're going to go up a lot because is it Japan? But there's a lot of people around the world. They just stopped just making cars. They're just like only electric cars now, and so that market's going to go even higher than it has been. I know uranium is one of them. Petroleum's always been good. What's something else? No, not technology. I think it was basic material. Oh no, it's the opposite of a few of these. Oh, I remember what I wanted to do. Last time, I think I talked about BlackRock, and I wanted it to crack 750. It did that and went all the way down to like 730. So this asset management, you know, all those hedge funds, hedge funds and stock pickers and stuff like that, you know, they're losing all the longs and shorts now. Whoa, I just saw a dude that looked like me. Wait, go back to the commercial. Aw. Oh well. But I forgot what I was doing. Yeah. I know what I could do. First, let me order my turkey sandwich. Let's see who's talking first. Winning percentage of bounce short. 80%? If I'm thinking right. Yeah, 80%. 1 to 3. Risk 7-10%. Category 2-3. Aiming for the backside of a gap up short. Yep. Where's my turkey sandwich? I thought I had this saved. I've been getting it from other places. Yeah, I'll do it later. There's something else. There's something I was doing. I remember. I wanted to show BlackRock, the Amazon. Yeah, everything on my phone is red right now. We got Twitter, Apple, the bond yield that I'm waiting for it to go under 80. It's only 20 cents away. AMC, GME. I just mostly keep those on my watch list for like retail temperature testing type stuff. IWM, TSLA, Tesla, Google, BlackRock, Amazon, SPY. So pretty much the top 7 companies in SPY, about the 3 most popular retail, 2 social medias, and about 4 indexes. So top 500 companies, top 1,000 companies, 2,000 companies, and I feel like there's another one that I can like say, but they give me like a decent understanding of like, are things lining up in terms of what's connected to what, like bonds connected to the stock market, bonds connected to gold, how do I say it's like retail compared to investor. Like, it goes all over the place. Yeah, I don't need the tabs for that. There's something else I was doing. Bro, these lights are really annoying today. I don't know why.
forgetting something. Oh, here's my keys. No, actually, I already said this. I feel like there's something major I'm forgetting now. Don't worry about it. All right, guys, I got 2 minutes before I'm gonna head out. Anybody got any last questions? Isn't a good way of investment for average people just investing in index funds? Yeah. All the index is just like the total money of a basket full of tickers. And so, you know, if that index has companies that you believe are fundamentally strong, can fight inflation at this time, or they, you know, have good year-to-date returns, or there's just an overall trending sector, and or you have I don't want to say insider knowledge, but you have like, I don't want to say faith either. Like I'm trying to think of like something that other people, you know, they're traditionally going to this place like so often that there's no way it's going to go down. Like Procter and Gamble, Kroger's. I'm not talking about like Target and Walmart, because like that's more of, there's always going to be a Target and Walmart out there, but there's some out there that have been out since, how do I say it? They're just really hard to die. Not conglomerate. What do you call that? Yeah, something like that. But you're right. Going into the index, it's pretty stable, pretty safe. And if you know when to buy, pretty much like on a big dip, and know when to sell, and like once it's oversold, it's pretty safe. Now, long-term gains, which is you know, what you want to do in a stable economy more than just looking at the ticker itself. Yeah, it's still safer. Like going into SPY, like I definitely have some regrets of doing this instead of like an individual company, but mostly because it's like SPY, that I feel like I wouldn't have learned like all the other like macro ideas without having an incentive to, you know, pretty much figure out what is possibly making this move. And then like there's a big like 10%, maybe 11% difference from where this should be if there was like a one-to-one correlation between the bond market, and like other areas of the economy. And like it's like been lining up for like 20 years, like 1-to-1. And then like in the past 2 weeks, and like it's changed. It's somebody's, I don't want to say lying, but like here, because at the end of the day, it's all numbers and money and everything. It's just really annoying. I trust the bond market more because there's more money in there. So I'm just waiting for this to fall off a cliff one day. I just feel like it's gonna be this week, or not this week. This like soon. That's what I'm trying to say. I just wanted to crack some supports before, because like just how I feel like I'm a bag holder at like 420. I'm assuming that there's at least like millions of dollars worth in the same position I am, waiting for that same thing. But then the opposite can be said for the calls, and I feel like there's more of those. Even though, you know, the data says more puts are in there. But back to the person that said, oh, should I short this? Like the people that are actually just shorting or just like buying without options or any other extra stuff, they have a lot of money in this. Yeah, I forgot where I was going with that. Well, not, I did forget. It's just I don't think I have it articulate enough to share. Well, all right, guys, it's 10:30. What is your skincare routine? I throw in water, throw in soap. What's that? Not shea butter. Something with coal, or it looks like coal. I want to say just being black with certain melanin. Black don't crack. That's not helpful. Main thing is I try not to have too much hot water because it dries out my skin and makes me ashy. But also don't put lotion on every day because that kind of trains my skin to desire the lotion. And then that's another thing that makes me ashy. I definitely do have like some skincare products though. Like, what do you call it? I don't even know them by brand that because I don't use them as much. I only use them like probably like once a month. If anything, training my like bags and like everything else to be tight to a certain place. That took like 2, maybe 3 months, and then just sleeping correctly. And then lifting naturally just made everything a little more tight. I'd be making Chinese symbols with my head. Like that's how I always like tell how tight I am. Is that's how Steven be reading my emotions when we talk. He's like, all right, Dontez, you're over there giving the like Tao Ni Ma up there with your face, and I'm like, oh, sorry, I have an honest face, and I have to fix that. But yeah, I'm gonna just leave it at that. All right, guys. I'll catch you guys tomorrow. And the lights also help a lot too. They're bright, but they make me look pretty. All right, I'll catch you guys Monday. Have a good weekend and stay safe. Make sure to have a max loss. If you're in options, make sure not to be a bag holder. Understand time decay and all the Greeks. And study. Peace.